Hey, welcome back to the ClosedByMo podcast. I'm your host, Mo. Everyone knows me as Mo or Mohammed. I'm a real estate broker and investor in New York City. And today I have with me a client of mine that recently closed on his first property purchased using an FHA loan in New York City, which is not super common. And I know there's a lot of, I don't want to say stigma, but sometimes there's a lot of confusion around the possibility of using an FHA loan to purchase in New York City. So I figured, what the heck? It might be helpful to have him here on the podcast. I'm going to stop talking now to let him introduce himself a little bit more.
All right. Hey everyone. My name is Akib Sahriyar. As you just heard, we recently just closed on a house recently with Mo via an FHA loan, right? And basically, a little bit about myself. Just a somewhat young guy, like a millennial, trying to navigate through New York and buying their first house and trying to close it and hopefully maintain it, make sure it's sustainable as well. I do have a career in tech currently, and a family person. We live with I live with my family, my parents, my sister, and we're just trying to get by.
Yeah, I appreciate it. Hey, thanks for joining the podcast, man. Can you talk to us a little bit about how did we cross paths? How did we find each other? Because I know the story, but I think it'd be great for people watching and listening to find out more.
Yeah, of course. It was kind of weird how we segued into actually buying a house. Because we initially reached out to you to look for a rental.
Yep.
Because we were trying to get into a bigger rental because there's more people in the house now, and I moved from Atlanta to New York. So before my parents and my sister were living here alone, and I was living as a bachelor down in Atlanta.
In Atlanta, okay.
So then when I moved here, we're I work from home. I need more space. I need an office. I need we need space. Stuff like that. So we were looking for a bigger rental, and then George, we actually went through a lot. We actually went through I would say 15, 20 rental properties.
Oh, wow.
And we even sent in applications, did credit checks and everything.
I had no idea about
that.
Yeah,
we did all of that, and then I think we were doing it through various brokers, wherever we knew or wherever we came across, and then my sister actually came across you, and then obviously we started videos too online, so that we're okay, a Bengali guy, and you're well spoken, and you look like you know what you're talking about, so let's talk to this guy.
Yeah.
So then we initially reached out to get a rental, and we're you know what, we need a house though, eventually, right? So let's try to get a house, let's try to aim for that.
That's fair.
And then that's kind of where we started, right? So start looking at properties, seeing what's feasible, what's not, and what fits in our budget.
Can I then ask them, because I know a little bit of the background here. I know you had initially tried to first rent, and then you're like, okay, it makes sense for us to actually buy. One thing I know though is you yourself and your family, you were looking at properties upstate. So I'm talking Albany, I believe, if I'm not mistaken, and a couple of other areas there too. Can you please share what led you to say, hey, you know what? Screw upstate. Let's buy in New York City and let's continue to buy with an FHA loan. So can you give me a little bit of background about, number one, why New York City, and maybe even why FHA?
Yeah. I actually completely forgot about the upstate part of our story, right? So after the whole rental stint, we went upstate to look for, more affordable homes, or as it would seem, it seemed like they were more affordable, but I guess if you look at the prices later on, they're almost pretty similar to what we're maybe currently going to be paying for, right?
Mm-hmm.
But we're looking upstate just because I thought it was a little bit cheaper. Maybe there's also a good a Bengali Desi Muslim community there too. So we're what, community wise we'll be good as well. We'll have people that will eventually get to know and build a community of our own. So we went there, but we actually were going to Albany every weekend for for almost a month and a half straight.
That's a nice
every
drive.
weekend, and we were just we were just so set on buying a house there. We're gonna buy it. So we saw so many houses in the span of a month or something, month and a half, and then.
Can I ask then what happened? Because I remember you saying you made offers in Albany too.
Yeah.
What sort of happened? Because it seemed like you guys had a good momentum there in Albany.
Yeah.
Talk to me about the offers you made, and also why didn't it work, and why transitioning back into New York City.
Yeah. So we did make a few offers, and they were pretty decent homes, but the mortgage and stuff was still coming out to a lot, and it's you're more restricted because it's not the city, it's the suburbs, and it's okay, if you only say for example, if you're a family of 5 or 6, but we only have a like one car in the beginning, like
Yeah.
how are we gonna like start to like travel to like our jobs, right?
Sure.
In New York City, it's easier because everyone can just like someone can hop on the bus or subway or like
Yeah.
there's different modes, right?
Yep.
So that was one thing, and then obviously like there's less opportunity that, like opportunities there as well, right?
Yep.
So if someone's looking for like a regular job or something, it's not gonna be that easy to kind of find a job after you like assimilate to the community and stuff like that, right?
Sure.
So yeah, so like I think there's just more perks and more benefits, and there's more opportunities in general in New York City. So we're like, okay, let's go back and revert back to our previous option.
Okay, well then, which leads me to my next question, tying it into the FHA. Talk to me about why you approached it with the FHA, because I know that was like the very first conversation we had, I believe, when it came to purchasing. What was it about the FHA? Like, what sort of drew you to it?
Yeah, so I mean, like I didn't really have that much knowledge about like the conventional and FHA, like those loans and what that really meant, and like even the whole like since I'm a first time home buyer,
Yeah.
everything's pretty new to me, right? Like
Yep.
and like I learned a lot from like yourself, and then as well as like from the mortgage lenders, and just like people advising us, like I feel like the rental stint and like even the Albany stint kind of like prepared us for this house. Like we learned so much along the way from different mortgage lenders, from different brokers along the way, right?
Yeah.
And like so like I didn't really have that much knowledge about it, but then how like there's always like or I'm not always, but like there's like I guess there's like a hesitation when it comes to FHA for people, right?
Yeah, of course.
And it's like like and like I was like wondering like like why like what is it really, right? And then, like after talking to you about it, then I'll also talk to like Emily and Joe from like from Clifco, and then they kind of broke it down to me, and I was like, oh wait, FHA actually helps like the buyer more than like the conventional. They're a bit more strict, but that strict is more beneficial for the buyer, right?
Yep.
So I was like, okay, like FHAs might not be such a bad thing to go with, right?
Sure.
And then like on top of that, like you could also put down a lower down payment.
Yep.
So people that that are in a similar position to like myself, like if you want to go into buying a house with a smaller down payment, FHA accommodates that, right?
Yeah.
So that was obviously one of the biggest things. And after learning more about the FHA, like, oh, you know what, like FHA actually helps the buyer out in terms of making sure the property is like fully, like safe,
They
inspected
they
properly.
do their own thing, yep.
The appraisal, that came out obviously for us, like both times the appraisal came out great for both houses, right?
Yeah.
I feel like FHA was a beneficial route for us,
That's good.
Yeah.
That's good. And then, can you talk to me specifically because I know you had alluded to it, specific misconceptions that you had going into it? Because I know you had to work with different lenders, and I think we were very happy with the person I referred you to. But from starting to finishing, what were some of the misconceptions you had about the FHA going into it that were later clarified?
Yeah, I think some like misconceptions. I think like one of the biggest things was like, okay, like, I would say like one of the biggest things, like, I think we're just worried about like maybe even like getting the FHA loan, right? Maybe it was like because I think like since we were talking about how strict the FHA was in terms of like the property and like the inspection process.
Sure.
I think that led us also to like be a little bit afraid of okay, like are we even going to like be able to obtain the FHA because of how strict they are?
Yeah.
But then like after finding out that it's more for the like helping the buyer out in the sense,
Sure.
so it was okay, like we're thankful to God that we ended up still getting it and being approved. So I think like one of those that was one of the biggest things, and just making sure that it accommodates us even like financial and like financial wise as well as like credit wise too,
Mm-hmm.
So like was like I'm still in the process of like also building my credit as well. So the FHA help with the lower down payment as well as
The credit
just like the credit requirement. Yeah.
Yeah, because the FHA is one of those amazing things that's like, it's basically the government like taking a risk on you, first time buyers as well as people that otherwise wouldn't have been able to get qualified for conventional mortgage because of, let's say, credit or the amount of cash that they need to bring up front. Because I work so closely with you, I know some of the challenges we face, especially I think on the first property too, when we were using the FHA loan and we were in the underwriting process. Can you describe maybe a couple or maybe one major challenge that you had encountered when you were purchasing with an FHA loan? Because I can think of a couple, but I'd like to hear from you, and then maybe I can bounce out some ideas too.
Okay, so what was some like challenges that we faced when trying to go to the FHA?
Maybe like sellers accepting offers, maybe during the inspection phase when we're under contract, stuff like that.
Yeah. I think like a lot has happened the past few months. I'm like I'm a bit jumbled, but yeah, like I feel like like you mentioned, like the first thing was like just wait, what did you mention the first time?
So for example, just maybe kickstart a little bit. I know one of the challenges that we faced when we were like looking at homes, even when we had gotten the offers accepted, was when we submit an offer and like the seller or the broker sees like it says FHA on it, immediately they have a psychological aversion to any kind of government sponsored loan. It's not that they're discriminating; they're allowed to be like, hey, though I don't want to accept this offer because it's FHA. But I remember we had to be very strategic about how we were making offers, and we had to really like I remember having to put on like some figuratively my punching gloves and being really aggressive with some of the brokers about it. And what helped was working with the right lenders, because they were also able to come in and be like, hey, yes, it's FHA, but hey, we're very confident about getting this file approved. In terms of like some of the strict property standards that we saw, I don't know if you remember this, but remember one of the first properties that we were under contract in, the FHA inspector said they had to repaint, I think, like the mannequins or the elephants in the front of the house, which I laughed at, the loan broker laughed at, the seller was like, what's going on? Why is this even a thing? But they were like, okay, fine. That didn't work out, obviously. But I'll segue to my next question now. How did the competitive New York City real estate market affect your home buying process with an FHA loan? Going back to what we spoke about, how sellers psychologically, when they see FHA, they're like, oh, wait a second, I'm going to put this at the bottom of the pile. So can you talk to me a little bit more about how competitive we had to be, because we were working together as a team on this?
Yeah, for sure. Yeah, I feel like I mean it's not easy. Like like right now, like we're sitting here and we close on the house with the FHA loan, so it's like okay, like we're done. We've done it, but like no, it's not like an easy process to like go through, because like we obviously looked at a lot of houses too, and like I'm not exactly sure what the number is of like how many offers we put on or like even like pursued. But I feel like a lot of those will probably like have maybe declined because of the FHA, right? Yeah. So we kind of got lucky with like the first house, even though that didn't work out. We got a little bit lucky, even though they were a little bit hesitant in the beginning, but then they ended up kind of like agreeing, but then ultimately backed off at the end. Right? Maybe the FHA turned them off again or something like that. We'll never know now. And then and the second home also, I feel like they were also not that easy to deal with, because they weren't like all jolly good and
they weren't jumping,
we're good to go.
They weren't jumping.
They were like let's a little bit hesitant, and then I'm thankful that you guys you and the other brokers were able to work together and kind of persuade them in a nice way, and like allow them to agree. And I feel like they're happy now, right? They got their checks. They're chilling, right?
Absolutely. Here's a question for you, because I think a lot of people, if they don't know about the FHA, when they find out, hey, it's a low down payment service, everyone's very happy about that. Like, hey, 3.5% down versus 20-25% that they might hear. Can you talk a little bit more though about some of the unexpected costs that you had? And when I say unexpected costs, I mean costs that you didn't know going into it, because if memory serves me right, we had worked with an initial lender that unfortunately wasn't super responsive, maybe not as communicative in terms of what you should expect going into it. Because I remember when I put you in touch with some of the lenders, you were like, oh wow, I have the down payment, but I also have closing costs. And you're like, oh, I didn't know there was going to be a difference about that. So can you talk to me a little bit more about that unexpected or like costs that you had with the loan process, like before you even bought the house, like what people should expect if they're thinking about getting an FHA loan, as well as any of the financial hurdles that you had with that. For example, when they maybe looked at your debt to income, or maybe your income coming into your bank account, like anything that you think someone listening or watching who's thinking about getting an FHA loan could find useful.
Definitely. Like I feel like we were not like that prepared in terms of like being ready to like, or having the financial means for a down payment and a closing cost. Like we definitely had enough, but we did not think about like how much the closing costs were going to come out to. Now I feel like for me, like personally, I felt that way because like growing up in Atlanta, like some of my friends have bought houses too. So like when I heard them speak about their experiences, it wasn't like they like I never heard like a really big like like they had like massive closing costs, right? I feel like it's a little bit different here because of the laws. New York
City's different.
The laws, the title stuff, the title costs, and like there's like a whole page of like different closing costs, right? That I can't I can't reiterate to you from memory, right? But I feel like because we weren't aware of how much the closing costs were going to come out to, that led us to like try to put a bigger down payment down. Whereas that down payment is going towards like the house, and maybe like ultimately that the sellers, somehow, or maybe someone's getting paid, through that. But we thought probably that down payment is gonna cover the house down payment, but also the closing costs as well.
Okay.
All right, so because like I think if we went into it with like the mentality of like this is like, say for example we had $50K, okay, 25K is gonna go closing cost. 25K will go to like towards the down payment, right?
Yeah.
So but we weren't thinking like that. We were thinking like, oh, okay, 50K. We'll just put all of it towards down payment. And closing costs will probably be like change. Yeah, a few thousand. So like we'll cough that up, right?
Yeah.
But it was like more than like almost close to like 20 grand probably, right? I would say, right? Closing costs. So like definitely if anyone's out there is watching, like if you have like a low down payment, like whatever it's like 20, 30, 15K, have like maybe double that amount just for the closing costs.
For the closing costs.
Yeah.
In New York City.
In New York City specifically, yeah.
Right. And I think that was something that caught me off guard too, because I always ask clients like, hey, did you got pre-approval? Did you at least get an idea of what's going on? Especially when it's FHA, because you're more cost sensitive. Every single dollar matters quite a lot, and you have to be very much on point. And one thing I advise my clients to speak with the lenders about is have a good understanding of like, hey, if I bought this X house, purchase price for X thousands of dollars, how much of my cash that I have allocated for this can I put towards the down payment, and how much do I have to keep for the closing costs? Because it's something a lot of people don't necessarily consider. And closing costs, it's not going towards your loan balance. This is just literally the cost.
Fees.
Yeah, it's the cost for the transaction itself, right? So I'm glad you were able to get that resolved, because God forbid we, had stuck with the initial lender and we were in contract, and then you were like, whoa, wait a second, something's different here, because then our terms would be different than what we had agreed upon with the seller, and the seller could back out of that contract if anything, could even tell you, hey, if you want your deposit back, pay me X amount of money, whatever it is,
Yeah, and that first house, we actually were going to put a lower down payment anyways. So and like, even without knowing about the closing costs. So like, I guess at that moment, we felt a little bit confident, and like, okay, we're putting like maybe like 15K down. So we definitely have enough money for closing costs. But like if we were aware at that moment, like, okay, like closing costs could potentially be somewhere between like 15 and 20K, then we would have probably when pursuing the second house, then maybe been a bit more smarter with like, okay, like let's just put a little bit less down so we have more than enough left for the closing costs.
Gotcha. Yeah, that's good. Well, it's good advice for anyone that's thinking about FHA. 3.5% is not the total amount that you would need out of pocket. 3.5% plus maybe another 2 to 3% minimum for the closing costs and facilitating all the fees and everything. Now, I already know the answer to this question, but I want to still ask you, because I know people that are thinking about getting an FHA loan are going to be watching this, and they'll always have this in the back of their mind. How do the FHA's inspection and appraisal requirements affect your home purchase? And to give everyone a background here, when you go through a conventional mortgage, the bank will have to stick with their underwriting policies, right? But if you're going through like an FHA loan or like any kind of federal backed program loan, the bank will not just have their own criteria, but they'll also have like the federal criteria, from what my basic understanding is, right? So like the FHA administration, whatever it is, they will do like an inspection or appraisal. It's gonna be heavily more regulated than, let's say, a conventional. Can you talk to me a little bit more about what your FHA inspection and appraisal process felt like, and maybe what concerns you had going into it? And I know everything worked out well, but that would be really helpful for people that are thinking about it.
Yeah. I feel like, honestly speaking, like I feel like we didn't have such a bad I guess from my side of things, like I don't know what maybe you experienced behind the scenes, but you were like obviously working with us, but you're also working for us behind the scenes. And like doing a lot of things that we weren't like really aware of, right? So like obviously like thanks for all of that, all the help. So I feel like for on our end, as like just like from like the like the customer side of things, like it felt like a pretty seamless process. They came in, they did their appraisal, they did their inspection, and luckily it was actually like a perfect appraisal, right? Like at the perfect amount. It was like there was no like, okay, fix this or fix that. We didn't have to like play tug of war with the sellers or anything like the previous house like we did.
Exactly.
And maybe that caused them to back out or something. I don't know, but we're actually happier with this property because it's a nicer area, and just like there's all of the things that we need like in our life is around that area, right?
That's good.
So but I feel like we had a pretty good process, and I feel like if anyone is buying a house in the future with via FHA loan, like definitely just be like anticipate some kind of thing like going not going south, but maybe like there could be some hesitation from the seller side if the FHA appraisal comes back with like, oh, this is like valued at more or less, or it could be or like if there's some things that need to be like renovated or something like that. So then you would have to probably work with the sellers to like pay off some of those.
Find and understand.
And
it's like I tell my clients the same thing. It's like leave yourself some wiggle room, some breathing room in there too. You're absolutely correct. There was stuff going on behind the scenes that
Yeah.
I was trying to, like, for example, with the appraisal, I was there,
Yeah.
and I came prepared with comps as well. So I gave I was like, hey, here are the comps. Here's where I think it should be valued, and he was like, he said it's an independent appraisal, but he said, okay, I'll take it into account. And it's things like that that go on behind the scenes that you have to do to make sure everything gets across the finish line. So I'm glad nothing happened on our side, but the first house definitely we had some hiccups here and there, which may or may not have caused it not going through. In terms of your experience overall now that you've sort of earned your stripes, and I know you're still doing some projects in the house, but in terms of going through from start to finish the entire process, what advice would you give to someone considering a home in New York City with an FHA loan?
What advice? I mean, there's a lot I guess that could be said, because like I feel like we could have done things like smarter, maybe at every angle. Now that we're done with the process, now we're like now we're kind of like, it's like more like a retrospective, like
hindsight's 2020.
Like okay, like I could have done this or that, or money wise or this wise or property wise. But I feel like definitely like like as we were talking about like the closing costs and down payment, like make sure you have like like a good amount of money, like depending on how much down payment you want to give, or what the 3.5% of is of the house that you want to like go for in the future. And then have that, but like maybe a little bit double. Like if you have double, then you're like, I think you're in the safe zone, right? You'll have enough for closing costs, and if anything comes up with like, or if anything comes out of like the appraisal stuff, then maybe there's enough money to like find an understanding, right? So I feel like like having double of that, like I guess like 7%, right? Kind of like having a 7% of like the value of the house would help a lot. Then you won't have any like financial hiccups along the way, and you won't. It'll speed up the process, especially with the mortgage lending process, because I feel like that was the place where we kind of a little bit got stuck, just because I was traveling, and then just like having like showing that I have the funds in my account, and then like we're also going to like 2-3 banks at a time, so it's like okay, like showing both the bank statements and all of that. So it's wiser probably to have all the money in one bank account, have that just like sitting there for like maybe a couple of months before you like, or as you start looking for properties, right? For us, I feel like we were a little bit rushed just from our side. We rushed ourselves because of our life events that are happening in our life, right? But if you have the time, take the time. I would say like that's the biggest thing. Like take some time, because I feel like you'll find like a really good property if you take a little bit more time, right?
Yeah, absolutely.
And like the perfect spot. I feel like we also were like blessed that the first house didn't work out, because this one is like more of a blessing for us. That's how it always worked out. Yeah. It was like I guess like that was a little bit of time that we kind of like took back, and we basically maybe like I would say we got rejected from that, or like they backed out, and then they were like, okay, like we'll just start again, right? Like this one, we'll start again, right? So I feel like take your time if you have the time. Make sure you have like a good amount of money in your accounts, and just pray to God everything works out.
There you go. It's so funny because I remember I say this to all my clients too, which is like, and I think I remember saying it to you too. It's like, don't rush the process. If you rush the process, you're gonna make mistakes. You're gonna stress me out. You're gonna get stressed out, and I'm gonna make mistakes, and we don't want that to happen. And it's important to take things one step at a time, especially when it's something so big. Like every single time someone buys or sells their house, their primary residence, it's usually the biggest transaction they've ever done in their life. You know, and you don't want to make a mistake. You don't want to make a $500,000 mistake, $700,000 mistake, or whatever the purchase price was in your case. So you want to take things one step at a time, and I'm totally fine with leaving the closing table if we realize that, hey, this is going to be a mistake. And by the way, every single time we don't get the house that we initially thought we wanted, with all of my clients, we always end up finding something better. Somehow it just works out. It's like, oh, this actually works better than the first one, or whatever, the second one, the ones that didn't work out. So I'm glad that worked out for your family. Here's another question then. If you had to go through the entire process again, what would you have done differently? The top 2 things or 3 things that you would have done differently?
I would say like, kind of going back to what I was saying earlier, like maybe not rush ourselves, like try to find some more time, and like just take a breather, like think of alternate solutions, like what, okay, if you do eventually want to buy a house, let's just like you said, it's a big purchase, like maybe the biggest purchase in your life, unless you're buying a supercar, right? But like just take your time, find the time, find the time to like make time to like actually look at properties, more than like obviously more than a few, because you want to like find that dream house, or that the perfect property, and then just I would say definitely broaden your options too. Sometimes like we might be like in a small little bubble, like okay, like this is where I need to stay because of X, Y, and Z because like this family member stays here or like this community. But like I feel like New York City is so diverse. You'll find people of your your religion or your ethnicity or your mindset everywhere, right? Like so you'll find pockets of that people. So like definitely broaden your your search as well. And I guess finally we could say is like like be patient, right? Be patient, right? Because like New York City is like so like the market here is so crazy that obviously everything's really expensive. But I feel like even with all these expensive like properties and homes and stuff, you'll still find like a like affordable one, like for you and your family, right? So I feel like you could like take your time, be patient, and I think you'll find like the right choice. And ultimately that's gonna be an investment for you, right? Absolutely. So
I completely agree. I think you said it in quite succinctly.
That's a hard word. I don't even try that word, man.
Succinctly. There you go. Here's my last question for you before we sign off. Despite the challenges, how do you feel now with your decision to buy using the FHA loan?
No, I feel great. I feel like we had a pretty good process, like we just talked about, and like I feel like people shouldn't like shy away from it or be afraid of it, and like ultimately like we talked about in the beginning, was like FHA loan helps the buyer, right? So whoever's looking to buy a house, it's helping you guys, right? It helped us, right? So and especially like if you don't want to put like 200-300K down, right? You could put like a lower down payment. Obviously that means you might have a higher mortgage, but if you're able to manage the mortgage and stuff like that, like FHA loan is like I think a pretty solid route to go with. Gotcha. Right? Because like even if like people are like, even if some sellers are afraid of it, like you just keep moving forward and you'll find the right house, right?
Yeah, absolutely. And it goes back to like you're not going to get 100% of what you want. You have to look at like what your limitations are, and if you have to go through the FHA, which is a great program, then you have to understand, okay, some sellers are going to be averse to it, just like anything else. Can I ask you then one question that just popped into my head? I know you're doing renovations in the property right now. What's your long-term goal with the property? Then are you going to be using it as a family house indefinitely? And then the follow-up question would be, do you have plans to refinance it? Maybe in a few years once you build up some equity into the property.
I think that's some great questions. So definitely like we're using it for like a family house because now that our family is growing, and God willing it'll grow more in the future, right? And then so like trying to like make some more space in there, like on the lot, right, wherever we can, whatever's like according to the laws and stuff, right? And then building it, like getting this little like a homey feeling into it, right? Like somewhere that we want to live in for a while, like like we're not trying to move anytime soon, so trying our best to like give it that sense of home where you feel comfortable and safe and stuff like that. And then the second question was refinancing. So I don't really know much about that yet, but like I heard from you, I heard from like obviously like Emily and Joe and them, as well as like previous brokers that I worked with too, like that's always an option later on. Like you could refinance it, maybe if the interest rate goes down, you could, like that'll be beneficial for us. So like I would definitely have to look more into it and see like if that makes sense like for us at that time. But I'm also aware that when you do refinance the home again, you basically have to pay all the closing costs again too, right?
There's going to be it's not as high as when you first get the loan, so there's going to be closing costs for sure. So you have to look at seeing, okay, is it worth it for me to take a much lower interest rate? Because it'll affect my monthly payment and everything. Versus like the amount of closing costs that I have to pay. For most people, when let's say if they're getting like a 6.5%, 7% whatever interest rate, as long as the interest rate drops like significantly, I don't know if we'll go back to like 2%, whatever it is. Then it might make sense for them. Also, the alternative too is like as you're paying down the mortgage balance, and over the years your property value is going to go up too. So that gap that you own technically keeps going up and up and up. So when you refinance, you have the option of pulling out money too if you want to renovate. Maybe like your dad mentioned, adding this an extension on the second floor. Stuff like that could be useful to keep in mind. Cool.
Yeah, man. Definitely. If it goes back down to like 2%, then it's like a no-brainer. It's like okay, let's refinance, right? But yeah, definitely something I want to keep on my radar though. Like if it helps us with the mortgage payments and stuff like that, like that'd be crazy. I actually saw something crazy at the house the other day. I think one of the previous sellers left one of their mortgage payments from 1998.
Wow.
Guess how much it was?
No way. 1998.
1998.
Oh, dude. Okay. $1,000.
1,098.
Ooh. That's crazy.
That's a steal, man. I would be so happy about paying that much right now.
That's gonna be you in like 20 years.
Well, I hope so, man. Like, like someone's gonna look at it like, oh my god, these guys were paying like like 3,000-4,000 for this. It's like 10,000 an hour or something.
Oh my god.
Yeah.
Hey, that's it. You buy it and then you win. And the good thing is if this is for you as a primary residence for a home, then you're in it for the very long term, right? And you are going to start. What I started noticing is by years 3 to years 4. You're going to start getting emails and loan brokers are going to be like, hey, you have so much equity in your home, why don't you pull out money? Because by that time the amount of appreciation your property goes through it means you're going to have enough of a chunk of equity in there that you can start pulling it out if you wanted to later on. But it's a great asset, man, because it's something that is very tangible. You can get a loan on it relatively smoothly because as long as you own it. And people have they'll buy a house 20 years later, they have so much equity in it, they'll use those funds to pay for their kids' college, whatever it is, really. And it's an asset that's always appreciating for the most part, thankfully.
Yeah. And wait, one more thing I was gonna say was and correct me if I'm wrong about this, but I feel like some people might be scared or they might be like, okay, if I'm putting a low down payment down, that means my mortgage might be higher, right? Automatically, right? So obviously if I'm putting a higher down payment down, excuse me, if I'm putting a higher down payment down, then my mortgage is gonna be low, right? That's like the simple math there, right? So I think some people might be scared, okay, what's the point of putting a low down payment down if I'm gonna have 4 or 5K of mortgage every month, right? Sure. So I think one thing I learned recently as well, and keep me honest here, there's something you're able to pay more than the monthly mortgage towards your property, on an annual basis or a monthly basis. I don't know if it's called recast or something.
Mortgage recast.
Yeah. So if people are worried about putting a small down payment down and having really high mortgage payments, what you could do is initially get close on a property with the FHA loan with a small down payment, and then save up money every month and then pay an annual amount, and then that will slowly start to bring your mortgage payment down.
And then you recast it, and then your payment's going to be adjusted to it. And I know just like refinancing, recasting might have a cost to it. But what's really great, and I think you're going to experience this now, not this year, maybe next year when you go to file your taxes, you can start writing off a bunch of stuff. Right? Perfect. So you have your mortgage interest that you can write off up to a certain amount. Property taxes as well, you can write off. Depending on how you use the property, how you classify it, so you can't technically depreciate it, but if it's if you're using a certain portion of it maybe for a home office or something and then consult with your CPA about it, you might still be able to get more tax benefits there. Okay. So it's pretty neat, man. I think a lot of people think I gotta pay property tax, I gotta pay mortgage insurance. Those are write-offs. Those are a little deductive against your taxable income. But it was great having you, man. I really appreciate it.
Thank you so much for having me.
Of course. I hope everyone finds this useful. If you have any questions, comments, concerns, whatever, please put it in the comment section below, or you can reach out to me. All my contact information will be in the description as well. Thank you so much, Akib.
Pleasure. Thank you so much. All right, man. All right. Don't be scared of the FHA.